The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 13th day of November. My pleasure to be here Monday through Friday, noon to 1 p.m. Dow is up 37 points. That just sounds like, ho-hum, what's going on here? Down up 30. No. The futures were up quite sharply, just like yesterday. And then there was this rug pull, and the Dow slides to the 25,193 area. And now it's at 25,429. This whippiness, get used to it. This is what I've been talking about for a while, saying that there's going to be a very choppy, very whippy November, probably maybe even going into December. But the real characteristic, I think, is going to be trading band, probably lower highs and lower lows. I don't see a crash situation yet. In fact, if there was going to be a crash situation, it should have happened quite a while back. This is a rotational correction. You can see that there is, in fact, the Dow is down up 0.13%. Look at this. The S&P with very strong resistance at around about 25,500 to 25,580s, the 9 and the 14 period moving average. Better not break the support from this morning. The S&P is trading right now up 0.53%. This is, I mean, what? Not a great looking chart from yesterday. That was really a cascade, a waterfall cascade to the downside. So the S&P this morning has been as high as 2754.60 and as low as 2719.48. Hits the 200 period moving average. Actually, a whole bunch of the moving averages right here at the 2755 level, and it's pulled back. I still see this as becoming an arch formation. Yeah, but maybe an M formation because there's a bigger retracement to the upside over the next couple of days. That's the best case scenario. Worst case scenario is this rotation to the different stocks, one at a time, with Apple being the last of the real biggies to be hit. And this says to me that there should be more consolidation to go. For subscribers, we actually chose a stock this morning in a completely different area, a long position in an electric utility. It acted really well, has the dividend. I'm not sure if it's going to be just a real short-term play or whether it's going to be more intermediate-term trade, but we're in. And the pattern that we're looking at is one of those that's very familiar to us, Chapman wave stalk leg formation, expecting the neck formation to go above the body. That's going to be interesting. So I'm just looking at chart formations that repeat over and over. Let's see if this one does. Remember, the dollar did it just perfectly the other day. We'll get to the dollar in a minute. Let me just say that for the S&P, 2716 is really key support. To break under that would be very negative. But a move above 2758, 2761, that area of resistance would say, okay, now we can go a little bit further to the upside before another wave of selling comes in. That's the S&P. Let's go to the QQ. NDX 100, a much better bounce this morning. It's not so great now, but it now is up 0.99%. At 167.97, up $1.65. This pattern, the H pattern, is just a formidable pattern. It says the best case scenario is a lowercase h to a lowercase m, unless you get a major buy signal, and that would have to be confirmed with the daily helping the weekly to really improve. The weekly right now is shocking. This is really a disappointment. And the monthly chart says, whoa, watch out. The NASDAQ has taken serious damage. Look at the move on the upside. I mean, give me a break. You've got to expect that there has to be some kind. Look, the last big retracement was back in July. No, it was August of 2015. Has a high of 113 round number and a low of 84.74. I would say let's call it about a 30-point decline is a pretty serious decline. and then it made this massive move to the upside from 94.84. Already it started about February of 2016, just accelerated all the way to the high that was made at 187.53. You cannot expect that this is going to continue to the upside without some kind of a time, if not price pullback. We're getting some price and we're getting some time. If November closes under 160, now let's call it 158, that's going to give time and price. And to break this downward propulsion, you have to see a whole week of trading above 176. That's a long way to go from here. Well, enough with that. IWM is the 0.82. Not bad percentage, but a lousy chart formation. It's at 152.25 up $1.22. Must hold 150, and if it can break into the 155s by this time next week, that'll be very impressive. I don't think it can. All right, let's get to some gold. Gold right now must be rallying a little bit surely. Oh, it's rallying from the low to a zero inch right now, 1203. This is just not a great chart pattern. The stochastic is at a point where you can get some kind of a balance. MACD is very, very wide distribution between the 9-period differential, the green line, the fast-moving average, and the slow line, the 26-period moving average. It's just way too wide to have a rally of significance that can hold without it being sustained for 3 sessions strongly to the upside. I just don't see that right now. I do see, and let me just do silver. I didn't do that yesterday. I'll do it now. Silver is up 0.009. Also not too good. It just doesn't show me the veracity. It certainly does to the downside, but nothing to the upside yet. And that H pattern in the weekly chart, got to give it until Friday, but we've tested the left side low. Whew, this is not good. But this is exactly the point where the dollar, which is down 54 cents right now, I keep saying cents. Where bips are never traded because we only buy the ETF. We're long from UUP back in early April. So this is a pretty good retracement after a spectacular move to break out into the 75. Yesterday the high was, I forgot to type that in. High was 75, I think 60 something. Yeah, 97.69. 97.69. 97. Now we've seen this with the dollar. It makes these little double tops, even sneaks a little bit above, but then it does a consolidation. It did that whole thing back in October, early November, and then it spiraled to the upside. This is a leg C in the weekly chart. I can see a pullback. I can even see a pullback to the mid-96s, but I have to tell you that the strength of the weekly chart is improved, but not enough to say to me that all's clear, that now we're going to have a spectacular move to the upside. No, I think that this move to the upside is kind of completed in this particular phase. I want to see what kind of retracement we get here. You know, we could even go back to the low 96s. Just take up some time. I don't mind. I think that's very important because we broke out, that monthly did break out in a leg B, and that's really positive. Look at the technicals. Very strong MACD, stochastic at 83%. I like the dollar, I must say. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's up 62, S&P's up 17. I'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back, and I'm just showing the E-mini here. Goes from the low this morning of 27.19, round number low, all the way down from the 27.55.75 high. Then it runs up to round about, 27.55 high. That was during the day. It was actually higher than that. Okay, early on. So what we're looking at here is a trading band. And I love these rectangles. And the only way you can play a rectangle like this is you've got to recognize it early. And then you've got to buy the low, sell the high. Buy the low, sell the high. Boop, 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 boop. And at some point, you're going to be absolutely wrong. And then you know it's finally broken that pattern. But in between could be a lot of fun. And all you do is you have to put a stop below the trend line or above the trend line. But we'll see if this continues. And what are the parameters? We're looking at 2750.25 on the upside, and let's call it 2739.50 on the downside. And it's kind of stuck. At one point, it's going to break above, but so far, since 11:30. That's almost an hour in a 2-minute chart. This has been stuck in this range. Well, let's get back to our story. So we were looking at the dollar, and I said the dollar could pull back. We've seen these big, red, ugly candles before, and within a couple of bars, it repairs itself and it goes on to a new recovery high. This time, I think from the technicals that I'm looking at, I think it's going to be a little more difficult, and that says have a look at the euro-dollar currency pair, because now you want to see, is there a trade here that says, yeah, it's only a short-term trade because the major trend is down, but it could be a bit of a surprise because it could actually hold for about a week or two. And I'm looking at this and I'm saying, well, it better happen real soon because the euro is at 1.128. It made a low this morning of 1.12165. And the resistance is at 1.1338. I can't, these numbers just kill me. When I'm doing the Chapman wave with these, I have to say, what? 1338.7. Okay, 1338.6. Oh, that's a peak. It just drives me nuts. I need to automate that part of it. All right, it has to get to 1.13665. And then I'll say, good, all's clear. We can retest that high that was made back on the 7th of November at 1.150. We'll see if that happens. I think the major strength so far is still in the dollar. USD JPY getting so close to that left side high. Can it do it? Can it do it? Oh, it's trying, but it hasn't done it yet. 113.96 on the yen, US dollar currency pair with Japanese yen. And yeah, it just constantly makes cup formations. This is the dreaded H upside down. Look, if you think of this as a Y pattern and the right side of the lip goes higher than the left side, it's an inversion of the Chapman wave H pattern. All right. So here it is. And that doji candle, which was an important candle at peak D, week of the 5th of October at 114.58. Yeah, we pulled back to the 14-period moving average, and now we're above the 9-period moving average, holding very nicely. Good action. All right, what am I forgetting? I'm forgetting two things that are a little bit important. One is there's a thing called crude oil. Anybody hear of that? Trading at 57.35, down 2.58, down 4.31%. This is the acceleration towards some kind of a V-shaped bottom. It better be, because if it's not, and it goes to the left side support, which is right here. Back in February, the low was 56.04, and we're less than $1.50 away from that, still accelerating with a flat stochastic. Remember, the flat stochastic at 7% is the equivalent of 93 or 95% in the stochastic when it's on the upside. If it stays in that range, it can stay there for a long time and just keep propelling the price higher and acting as fantastic support. That's the reason why. So crude oil is acting horribly right now. Yeah, this is just, what can I say, horrible. At some point it will turn around, and then I think it'll have to make an arch formation for a retest. But look at this. I'll go to the Dow. Remember when the stochastic over here was just holding so steadily, wrong chart, right there. When the stochastic was holding so steadily, right there. Remember, 97%, 96%. I said, this is fantastic. That's what you want. That's the lesson I learned way back about the stochastic when you read the book. And Lang was a discoverer of the stochastic. Actually, a lot of people claim that maybe it's relegated to Lang and others. Well, I noticed that almost all technical analysis books say above 80% is overbought and below 20% is oversold. I say, no, wrong thinking. It is exactly the opposite. Above 80% is strong action. That's what you want to see, and you want to see it holding there as long as possible. Below 20% is very weak, and you want to see it stay there as long as possible, especially if you're short. Once you get into this range below 80% and above 20%, that's other things can happen. And look what's happened. And the reason why I was saying that it was a big shock yesterday that we had such a deep decline, and that was just almost like program selling. And one of the reasons is that, look, the MACD is still, the 9-period differential, the green line is still extremely positive. That's why you can't force it down. It was down 100-something points earlier in the day, and now it's springing back. And that's even with some horrible action in some stocks. And stochastic is still at 81%. And that says to me there's enough residual strength to have a bounce. Certainly not enough yet to go back to 26,277, the high of just 4 days ago, but a bounce nevertheless. And then you got to be careful. Okay, this is what I'm looking at based on the stochastic and the MACD. And now the final one is that we want to look at the TLT. Why? Because yesterday the TLT actually did rally. Today it is down 48 cents, 130.61. It's just saying to me that it is stuck in a range and there's nothing to see here, folks. And until it really, the TLT, the Lehman 20-year T-bond fund starts to trade decisively in the 115.80 to 116.20 area, that's where I think you're going to get the test of whether or not we're going down deeper in the stock market and money's coming out of stocks into what it was the so-called safety of bonds. That's what we will see. But in this case, yields are still an issue because we haven't really broken to the upside in bonds so that yields can come down much sharper than they have over the last couple of days. All right, now XAL, first question. XAL is the airline ARCA index. It's trading up $1.80, 102.67. I think it's going to make a leg D, and then we're going to have to see what happens, because I think there's a big arch formation forming right here. Look at that. This is 102.67, up $1.80, and the high that it has to take out to start leg D is 103.57. I think there's a good chance that it's going to do that. In fact, I wouldn't be surprised if a chunk of the selling this week is kind of done for now, and that we have a couple of days respite. The market tries to rally. And there's such a big discrepancy between the Dow up 0.32 and the S&P up 0.68, up 18. Give me a break. Look at this. When you talk about percentage parallels in the indices, if we go to Home Depot, part of the Dow, look what it's doing. It was up 3.5 points earlier on. Earnings come out. They're really very good earnings, except when you dig deeper. And now it's down $1.15 at 178.28. But this morning it hit 172. 172. Didn't take out the low of 170.91 from the 29th of October. We'll talk about which stocks are impacting the market, the Dow negatively, because Boeing right now is down almost full up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, on this 2-minute chart, I'm just doing the NQ. This is the NDX 100 futures. Also did a very nice bounce from the low of 6,801.25. And it went to 6,962 in a peak E, and now it's stuck as well in this range-bound rectangle. Let's go back to our E-mini just to show you Okay, there it is. Now comes the big test. Is it going to break that low of the rectangle? We'll see. Okay. Now we want to go to, we did that. We did XLI. I was asked about. XLI is the industrials. Yeah, nice rally today. 1.48%. One of the best percentage moves, but going nowhere. It's just nothing to see here, folks. It's at 72.05. Makes it low in the 67s. Just a week and a half ago, rallies to the 73s, pulls back to the 72s and 71s. Now it's at 72.03. This is not, no, that monthly chart is just not good at all. Let's go on to the FTSE closed down of the day. EWU, this is really not the FTSE. This is the British, the Great British, well, no, this is called the iShares UK ETF. Yeah, this almost looks like what we were looking at a moment ago. This is not very good at all. And if we go to GBDOW, this is the Dow. Yeah, it's the same thing. It's just not good. Lousy chart patterns. Home Depot, I did that, DI. So Julie wants to know, diamonds, long or short? It's going to make me cry because we didn't even get close to the 26,790 area that we shorted, but because we used the DOG, that 1-to-1, it shrinks every day. So we were forced out of it. Yeah, well, we took some nice profits on the way down to 25,000, but we were forced out of it with a much smaller gain on that big spike back in, that was November the 5th. Yeah, the 7th and 8th. And I didn't get back in. I would have, but I was just perusing how to do it best of all with the best risk reward. Didn't do it, so I'm waiting, and we'll be back into it. So my answer to you, Julie, is that I'm waiting for another opportunity to go to the short side. My suspicion is that somehow, some way, Dow 24,100 low that was made right here on the 29th. Is going to be, oh, that was the diamonds. I meant to go to the Dow, INDU. Yeah, so the Dow diamonds, of course, parallels, this is the trading vehicle for the Dow, has the same pattern, and at 24,122 low that was made on the 29th of October, if we break, if the Dow breaks 24,650 in the next few days, that test of 24,122 is coming. If, in fact, 24,122 breaks at any point in November, the next target, I don't see how after all this we can't get away from testing Dow 23,300. It's twice, January and in April it was tested. And the market wasn't anywhere as bad in terms of seeing the FANG stocks pull back. So I suspect we will see it. If anything, what we're looking at is very limited upside. And in fact, the 26,200, 26,400 should be extreme resistance in the Dow. But I did have a very unusual thing happen. I tried to go back as far as I could. I didn't have too much time to do it. I went back quite a few years, and I have not found 4 consecutive sessions in my Chapman Wave Trin gauge that gave a high reading without... I just haven't seen I don't see 3, let alone 4. So this is really unusual. And what it's saying is that at this particular point, the market is beginning to function in more extreme ways, although you don't really see it because of this rotation. Yesterday, there wasn't a rotation. That's why there was such a big sell-off. But because you can go from one sector to the others, and this time, we're looking at the FANG stocks, that's Facebook, Apple, Amazon, Netflix, Google, and we could put in a bunch of others, as being really weak in their monthly. This is the first time their monthly charts have shown weakness. We've got to be prepared for sudden slides. The rallies, I suspect, from now on are to be considered as maybe starting short positions. You have to have a little bit of a wide stop because you might have to add another short position later on, higher up. But this is the way I'm looking at it. All right, so now we've done that. Next question is Goldman Sachs. So Goldman yesterday, thank goodness we were out of it. We took very small loss after having a whole bunch of gains in Goldman Sachs being very kind to us, except for one day. And I'm looking at this Goldman Sachs as possibly being a harbinger of other things. It's telling us a story. If Goldman is acting like this, and there are lawsuits, there are a lot of things going on with Goldman right now, but it's just telling me that the whole financial sector, at this particular point, you got to be somewhat cautious. I wouldn't be aggressively long any of the banks. If you have bank stocks, fine. If they're doing okay, fine. But I don't think I'd be buying them aggressively just yet. I think later on I'd like to. Next question is OIH. Jane wants to know about OIH. Question is, hi, Basil. Could you take a look at OIH and tell me if you think it's ready for a pop? Thank you. So the OIH is, in fact, the Van Eck Vectors Oil Service ETF. Monthly chart made an H pattern. Let me draw it in because some of you maybe are new to my work. I always look at patterns and they repeat over and over. They're like fractals of human nature. And it doesn't matter what time frame, you'll always see them around. And in this particular case, there's a pattern that I call the lowercase h. You come down sharply on the left side. Look, this is a bigger one here. Look at this one. Look at how many H's there are. In the break, maybe I'll get my CD out and I'll show you. So in the dreaded H pattern, what happens is you come down sharply, you try to rally, and within one peak to two peaks, it just fails, and it not only takes out the left side low, but it goes sharply lower. And it did this a whole bunch of times. And then it comes to 20.46, the low that was made around about December or January of 2016. Is that, I'm sorry, no, I said, let me get that right. It was January of 2016, and then it bounces peak A, peak B, peak C. D is what we always look for. If it fails at C, that's very negative. It pulls back at C, and what does it do? It doesn't touch immediately the left side low of 20.46, takes its time, and makes yet another arch formation. And when that one takes it out, like this week, it takes it out decisively. Here we are below 20.46 at 19.30. And the low today was just a little lower, 19.16. And what we're looking at is that there's a little H pattern with a potential for a W to form in the OIH in the daily chart. The stochastic's improving a little bit. This is called a positive divergence. On balance volume is a day or so away from making some kind of a V-shaped attempt at a rally. So, Jane, this is very unusual for me. I'm going to go to a bunch of things during the break. What did I say I did during the break? And now I can't remember what I said during the break. But what I'm going to do during the break is I'm going to show you a couple of things, and I'm going to explain to you why. Here it is. I'm going to explain to you why maybe this is the time to just nibble on a position. I'll be right back. 2037.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the quantitative edge under the newsletters tab. TFNN.com, educating investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're looking at crude oil, and then I'll look at the OIH. Crude oil is in one of the things about a move like this waterfall cascade day after day after day says, wait a minute, if I'm right and there's a rally, where could we rally to? And you look and you say, oh my, maybe we could rally. Oh, we could rally to, it's at 57.31. A 12% rally would take us, let's see, 12 points. 12% rally would take us to maybe 61 or 62. Hey, wait a minute. That's where we were just 3 days ago, 2 days ago. So that's the difficulty. So what happens in this kind of failure pattern, either it starts to make an H pattern, which becomes an M pattern and wobbles around trying to form a base, because there's a secular, not just a cyclical move to the downside. This is now much more pervasive. It's not just a seasonal or whatever it is rhythm. This is now more a determined move to the downside. So that's the big risk here. So if I go to the OIH, I would have to see a rally in crude oil, even though there isn't always an exact repercussion and parallel move where the one moves and the other one moves together. They do kind of move in sync. They should. But it isn't going to be an exact percentage or anything like that. What I'm saying is at 57.16, rather than we used to have someone here in the den called Gigi, Goofy Golfer, and he came up with a fantastic expression of catch a falling knife, and he wanted to sell gloves, metal gloves, for all those people trying to catch a falling knife. That's really what you're looking at. And of course, we know that oil is slippery, so even that the metal gloves are not going to do very much for you. I'm saying to you, I would prefer, rather than say, look at 57.19, now I could nibble on it, because if you look at this monthly chart, there are a lot of resistance levels, but no support until you get down to like the 48 level. If you look at the 120-minute chart, we've broken 58.09 support. We're 56.66 is the next level of support. And in the 10-minute chart, you got a whole bunch between 57.02 and 57.92 resistance. So it's kind of stuck. This is what I'm going to suggest to you. Obviously, you're watching this quite closely, Jane. I'm going to say there are two ways to look at it. Either you can wait a day and see if there's a bounce tomorrow, because if there's another decline, tomorrow could be an acceleration with an even greater candle, bigger candle to the downside. The way I'm looking at it based on my work is that the on-balance volume is saying we are really close to at least a reversal attempt. If that's the case, then either you do this, one of two things. You either say to yourself, I'm going to buy a rally because I don't want to buy a red candle because they can get even redder. I'd much rather buy a green candle that's holding between 10 o'clock and my show, between 10 o'clock Eastern time and 1 p.m. when my show finishes Eastern time. We'll have a look at that together. And it might be tomorrow, it could be the next day. Here's what I'm telling you to look at. Look at the dollar. The dollar is only down, I shouldn't say only, this is a big number, but it's had such a big move. It's down 53 cents. If it gets into the 96.80 area or under it, I would not be surprised to see gold, also a terrible, terrible looking candle, have a bit of a bounce. And all I'm saying to you is that if it's a bounce, it could be a real nice percentage bounce. I wouldn't hang on too long. I'd raise stops, etc. in your OIH, which is the oil sector. Let me just give you the exact title. OIH. OIH is the Van Eck Vectors Oil Service ETF. And it's parallel a lot, not exactly, but it's parallel a lot to crude oil. So that's why you need to see crude oil. So if crude oil is rallying and the OIH has a bounce, and the OIH is at 1926, if you were to buy it at 1927 right now, even if it's just a small position, this particular dreaded H candle failure says that if there isn't a bounce this afternoon or tomorrow, and in fact it takes out 19 support, it could be, look at this, it could be a really big drop. Look at this monthly chart, 20.05 back in 2008. And remember, there were some indexes, not many, but some sectors and indexes made their low October of 2008, and some others made their low March of 2009. You get that rotation. Sometimes you get it in the semiconductors. I don't know what it is, but sometimes one is earlier than the other. That was 6 months. So now what I'm saying to you, look, 20.05 way back in the exact date was December of 2008. It retests it successfully at 20.46. 8 years later, January of 2016. In between, it's gone to 55, pulled back to 31, and then up to 58, and now it's down 20.46. Then it rallies a much weaker rally. To tell you the truth, my long-term outlook for crude oil is in the teens, but we don't have to go there. I'll talk about that in weeks to come. But it hits the 200-period moving average around about 33, 34, and then it pulls back and makes another arch formation, just like this one did when it made the arch and then made the lower low. So we've gone to a lower low now. That says you've lost all support. I wonder if I can squeeze this enough. Squeeze? Oh, look at this. The next level of support is the trough of 19.39 back in May of 2004. And then there's just a whole series in the 16s. So, okay, now you want to know why I'm a little nervous about saying to you, don't get too involved with this. I would only start a position only on strength. And I treat it as a trade. Let's go back to our daily chart. You can see why. Look, the MACD is still, the monthly chart is very negative. The MACD is holding very well considering where it is. It isn't making one of those big, deep corrections. And that says to me, you see, when you get a flat stochastic, it says there should have been a little bit of a cushion, and there isn't. That gives it a lot of room to go to the downside. I don't want that. So I'm saying to you, I know it was a simple question, should be a quick answer, but I'm giving you a lengthy answer because a lot of people have asked me about crude oil, etc. I'm putting the whole thing in the same category, and I'm saying if there isn't a rally in OIH, well, first of all, in crude, a $3.50 rally over 2 days that holds very well into the closes. The OIH has to get to the low that was made on the candle of the 9th of November. The low is 19.93. 70 cents with the kind of speed we've seen on the downside, that sounds like nothing. Been very tough to do for the OIH. So, sum it up. I would not start a position here. I'd forego maybe 50 cents because it pops up tomorrow because the dollar pulls back deeper. Gold actually has a bit of a rally, and all of a sudden commodities are looking a little bit better. I would rather see it move to the 14, to the 19. Oh, let's make it above 1950, 1948, 1950, somewhere above that, and holding from 10 o'clock in the morning, maybe tomorrow, into my show. We'll talk about it, and then I'll say, okay, now you can start a position. So it's at 1927. You say, wait a minute, I must lose 20 cents. I could put it in at 1927 now and have a 20-cent stop. I'll talk about that when we get back. It'll be strategy. This is a nice strategy session. I'll be back. Dow is now down 9. S&P's down, up 8. Not good.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up, Dave comes up, and Tom O'Brien comes up. I'll be with Tom later on today. So we're looking at the OIH, and my contention is that this acceleration down, if it resolves itself with a V-shaped pattern so that all those people that sold this past week in a week and a half's time are looking back and say, oh my God, just look at this, I should never have sold. I sold in the 20 and 19 area, and now it's at 21 and a half, 22 and a half. Wow, something spectacular is going to happen to do that. But at the same time, it is a possibility. So I'm saying risk reward, I wouldn't do too much. I'd start a small position. I was saying that you could buy it here at 1927, except you don't know what's going to happen overnight. That's all. So if it gaps down sharply, you could put a 20-cent stop, but it'll be 40 cents before you actually take it out. That's the only reason why. I'd much rather buy a reversal in trend. So I'm saying Jane, hold off a little bit. See if tomorrow we see some kind of an intraday turnaround. That turnaround has to see the, or I would say that the 60-minute chart needs 1.5 to 2 hours at least of seeing a green candle. And I would even say it really needs to be above today's high of 19.63. It needs to be in the 1970s and holding. And I'm saying, you know what? Risk reward, take a small position. And if it's working well, you'll be able to add to it, because if that turns around with the MACD and stochastic and on-balance volume turning up, it should be at the 20.60, 20.90s within a few days if it's going to do that. So it's a risk reward. Played very carefully. All right, did a lot there. Now, just a quick overview. This is terrible action. The Dow is now down 35. Just wanted to go to this for a moment. And one of the reasons why I've been saying raise cash, raise cash, raise cash. It's just not, for months I've been saying it's not a bad idea to have a cash position ready, because you're going to get some really nice buys. A question then BEP and the let me just do that quickly and then I'll go back to this. BEP, is that a petroleum type company? BEP. BEP is Brookfield. Yeah, hold off on this. Hold off on Brookfield. Hold off on Brookfield. I wanted to show you that if ever there was an opportunity now to have a decent rally, I think the Dow missed this opportunity, because we did go to a Chapman wave 5. I haven't got the circle here because I haven't got a confirmation of it. But leg C is going to go to a T. Watch closely. The Dow 50 points lower at 3 p.m. is not good. Say.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.